Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's mortgage and real estate market update. Got a fair amount of news packed in for you here today, so buckle up and let's go. Right into the bond market. Mortgage bonds are up about 30 basis points this morning at the time of recording. The 10-year yield is down about 4 basis points. And what this means for mortgage rates is that we should see mortgage rates open a little bit better than where they left off yesterday, just based off that movement. Mortgage bonds did test the floor of support yesterday and came back up, bounced off that floor of support, and now they're up a little bit today. So that's good news. We should see mortgage bonds stay right between that floor of support and that resistance level, at least for the day-to-day, unless there's some major market moving news. Now there is some news later today. There's a U.S. 20-year Treasury auction that's happening, and demand for that auction could be a market mover. If demand is low, we could see bonds slip. If demand is high, we could see the bonds move in a positive direction. So we'll see what happens with that and let you know. And then also, mortgage bonds have been, over the last month to 3 months, we've been on a downward trend for the mortgage bond, an upward trend for the 10-year yield, and that's kind of what is translated into the higher interest rates that we're seeing now. So, if you look at the macro for the last 3 months, we've been in this downward trend level, but if you get into the micro a little bit and you look at the last 5 to 7 business days, it seems like the mortgage bond is kind of stabilized just a little bit. We've seen some down days and then some up days, some down, some up days. And so we're really kind of trading in that same area that we've been for the past few days. Now, this could be an indicator that the mortgage bonds are that downward trend is kind of leveling off, and maybe moving kind of more in a single direction. If that's the case, what that will mean for mortgage rates is that interest rates are going to level off as well, especially as far as volatility. We've had several days where we've been down and then repriced for the worst, and then days where we've been up and then repriced for the worst, and the days we've been down and repriced for the better. And there's always repricing that happens, but hopefully we'll see a little bit of stability if this downward trend kind of levels off on the mortgage bond. We'll see a little bit of stability in the interest rates and possibly a plateauing of the interest rates as well. Now, only time will tell on that. We'll see what happens over the next week to 2 weeks if that is the case. But just a quick note about the last few days that when you just look at the chart, it looks like there's been a little bit of a level off. We'll see what happens over the next couple of weeks. Now, in other news, Mortgage Bankers Association released their application data for the week ending in April 15th this morning. Now, that data showed that overall application volume dropped this past week, and it dropped by 5% to its lowest level since February of 2019. Now, applications to purchase a home were down 3%, and they're down 14% year over year right now. Refinances decreased by 7.7% last week from the previous week, and they're down a whopping 67% year over year. I think everybody understands why refinance activity is down. But still, every time we talk about the refinance activity being lower, I always want to make sure and mention that home values are higher this year, and we'll talk about that here in just a second. Home values are higher, and so there's still an opportunity to do a cash out refi, consolidate some debt, maybe do a remodel on the house, or pull some cash out of your house to invest into an investment property or other investment vehicles. So there's always that opportunity to use the value and the equity in your home to do something else with it. Don't let that cash be lazy if you can do something else with it. Now, the National Association of Realtors released their existing home sales data this morning for the month of March, and that measures and tracks closings on existing homes. So for the month of March, existing home sales decreased 2.7% from the prior month, and it's 4.5% from a year ago. Now, supply was down by 9.5% from a year ago, but it did raise up to 950,000 units. So if you remember, just a couple months ago, we hit the lowest level of supply inventory that we had tracked since we've been really tracking it. So it was a record low. That's come back up, and at 950,000 units at the current sales pace, that gives us about 2 months worth of supply. So supply is still very, very small. There's still not a lot of inventory on the market. And that's, that data from March kind of reflected that. Also, the report showed that the median home price for the month of March was $375,300. All right, now that's up 15% from the previous year. So some interesting data there coming out of National Association of Realtors. That's about all the news that we have for today. There could be some more news that comes out throughout the day, especially we're going to be looking at the 20-year auction later this afternoon. If anything moves the markets, we'll let you know. But if you have any questions, please leave a comment. Make sure you like the video and subscribe to our YouTube channel. Share it with your friends. If you know somebody that would find this information helpful, be sure to share it with your friends, and we appreciate it. I hope you have a wonderful day, and we will see you tomorrow.